To know others is wisdom, but to know oneself is enlightenment, I say, old chaps. Last year, this very channel addressed the rather serious topic of global inaction is causing a greater risk of mass atrocities worldwide. Quite the mouthful, wouldn't you say? We used this rather grim subject to guide our investment strategies, if you can believe it. But that's not all, my dear viewers. We've been banging on about the importance of gold investments both before and after that broadcast. I dare say those of you who have been following our channel religiously must be living quite the cushy life now. Financially independent, as they say in the city. Take my lovely wife, for instance. She's managed to rake in a smashing $3,360,000. Rather splendid, wouldn't you agree? Does gold hold the key to inflation-proofing your wealth? Gold has recently faced a downward trend after once again failing to establish a strong position above the $2,740 mark. This resistance has become a formidable barrier, much like the strategic obstacles described in The Art of War. Just as Sun Tzu advised understanding the terrain, investors must comprehend the current market landscape to navigate these fluctuations effectively. To know others is wisdom, but to know oneself is enlightenment. Gold has long been regarded as a safe haven, but in today's shifting economy, does it hold the same power? From Sun Tzu's ancient strategies to the enduring wisdom of Yi Jing, let's explore why gold's resilience makes it indispensable for both short and long-term investments. Are you ready to turn market uncertainty into opportunity? If you're ready to strengthen your portfolio with the time-tested stability of gold, join us in exploring dynamic investment strategies and uncover the ways gold can balance your risk and reward. Subscribe now to gain insights from industry experts on how to navigate today's volatile markets with confidence and precision. As Yi Jing pointed out, when the situation is secure, the wise do not rush. Gold's price stalemate, is this a breather or a breakdown? The market is in a state of confusion. Gold is in a weird spot. It's not moving up or down significantly. It can't seem to break out. We've seen this before. The market is familiar with these periods of stagnation. The bulls are getting antsy. They are eager for a breakout. They want to see new highs, but gold is stuck. It's like it's caught in a loop. It's like it's taking a breather. The bears are circling. They smell blood. They sense an opportunity. They think gold is headed lower. Who's right? It's tough to say. The market is divided. The bulls will point to inflation. It's still a problem. Rising prices are a concern. Gold is supposed to be a hedge against inflation. Historically, it has been a safe haven, but the Fed is fighting inflation. They're taking measures to control it. They are raising interest rates. That's bad for gold. Higher rates can dampen gold's appeal. Higher rates make other investments more attractive. So what's the verdict? The market is at a crossroads. Is this a pause or are we headed lower? We need more information. Let's dig deeper. The future of gold is uncertain. To see victory only when it is within the ken of the common herd is not the acme of excellence. How can predictive strategies enhance gold allocation decisions? Economic signals, deciphering the data for gold's next move. Scenario analysis is essential for managers who seek to anticipate various market outcomes and position gold holdings accordingly. Using predictive models to simulate economic conditions such as stagflation, dollar weakening, or even recession allows managers to test the resilience of gold allocations under different scenarios. This aligns with the proactive insight in The Art of War. True expertise lies not in reacting, but in seeing potential outcomes ahead of time. We need to look at the economy. What's it telling us? Durable goods orders were strong. That's good for the economy. But it could mean more rate hikes from the Fed. Consumer sentiment is mixed. People are worried about inflation, but they're still spending money. It's a confusing picture. The job market is still strong. That's keeping the economy afloat. But inflation is eating into wage gains. The Fed is watching all of this. They're trying to thread the needle. They want to tame inflation without causing a recession. It's a delicate balancing act. And it's making the gold market even more unpredictable. As Yijing mentioned, when the root is deep, there is no need to fear the wind. Gold has consistently proven its value as a long-term stabilizer, particularly in portfolios with a focus on wealth preservation. While gold's price may experience short-term fluctuations, its underlying stability as an asset makes it a valuable counterweight in portfolios. Managers with a long-term perspective may treat gold as the anchor of stability, especially when facing prolonged periods of inflation or economic downturns. The Fed's balancing act, inflation, interest rates, and the gold effect. This is a complex dance that impacts every corner of the financial world. The Fed is the 800-pound gorilla in the room. Their decisions ripple through the economy, affecting everything from mortgages to the price of gold. When they talk, everyone listens, especially gold traders who hang on every word, trying to predict the next move. Right now, the Fed is hawkish. They're worried about inflation, which has been creeping up steadily. And they're going to keep raising rates until they see it under control. This means tightening the money supply and making borrowing more expensive. That's bad news for gold in the short term. Higher interest rates make gold less attractive because it doesn't yield any interest. Higher rates mean higher opportunity costs for holding gold. Investors might prefer bonds or savings accounts that offer returns. But what about the long term? This is where the picture changes. That's where things get interesting. If the Fed raises rates too much, they could trigger a recession. A recession could be very good for gold. Historically, during economic downturns, gold has been a safe haven. Recessions often lead to fear and uncertainty. People flock to gold as a store of value. Recessions often lead to fear and uncertainty. And that's when gold tends to shine the brightest. And that's when gold tends to shine. Its value often increases as people seek stability. So what's a gold investor to do? The key is to balance short-term risks with long-term potential. It all comes down to your time horizon and your risk tolerance. Understanding these factors can help you navigate the complex relationship between inflation, interest rates, and gold. For portfolios aimed at capital preservation, a structured gold allocation acts as a long-term buffer against currency devaluation and economic shifts. Even during periods of prosperity, a foundational gold allocation of around 5% to 10% can enhance resilience, reducing the need for drastic portfolio adjustments when conditions worsen. Additionally, managers can add to this foundation during economic downturns, much like a deep-rooted anchor securing the portfolio through volatile waters. As Yijing stated, the wise man brings calm and the world around him finds order. Investor psychology is a crucial yet often overlooked component of effective portfolio management. In turbulent times, gold provides a psychological anchor for investors, helping them feel more secure and less prone to panic-driven decisions. Gold's safe haven status is not only a financial hedge but also a psychological one, instilling confidence when other assets appear risky or unreliable. Short-term pause or long-term power? Gold has long been regarded as a safe haven, but in today's shifting economy, does it hold the same power? From Sun Tzu's ancient strategies to the enduring wisdom of Yijing, let's explore why gold's resilience makes it indispensable for both short and long-term investments. Are you ready to turn market uncertainty into opportunity? Short-term trading is not for the faint of heart. It's a roller coaster ride. And right now, the gold market is especially volatile. But there are ways to manage the risk. One strategy is to use technical analysis. Look for support and resistance levels. Identify trends and patterns. Use stop-loss orders to limit your losses. Another strategy is to trade the news. Pay attention to economic data releases. Watch for Fed announcements. Look for geopolitical events that could impact the gold market. But remember, trading the news can be tricky. The market doesn't always react the way you expect, so be careful out there. Managers can communicate gold's role in the portfolio to investors underscoring its stability during downturns. Visible gold holdings, either through reports or direct communication, help maintain client confidence, encouraging a long-term perspective rather than reactionary moves. Educating investors about gold's role can further stabilize sentiment, much like the calm guidance found in Yi Jing, which encourages a balanced, mindful approach over impulsive reactions. For portfolio managers and short-term traders, what does this mean? In uncertain times, flexibility is key. A buy-the-dip strategy remains advisable, as gold's price action has demonstrated resilience despite broader market hesitations. Additionally, protective measures such as tight stop-loss orders could allow traders to take advantage of gold's potential rallies while limiting exposure to sharp downturns. According to Yi Jing, adaptation leads to flourishing. Thus, those willing to adapt to short-term volatility without excessive speculation stand the best chance of capitalizing on price fluctuations. In what ways can gold holdings balance currency devaluation risks? Gold has been a store of value for centuries. It's a safe haven asset. When times get tough, people turn to gold. We saw it during the financial crisis, we saw it during the pandemic, and we're seeing it again now with the war in Ukraine. Geopolitical uncertainty is bullish for gold. It creates fear and uncertainty, and that drives up demand for safe haven assets. Gold is also a hedge against inflation. When inflation is high, the purchasing power of fiat currencies erodes. Gold, on the other hand, tends to hold its value. That's why many investors consider gold to be an important part of a diversified portfolio. Why is gold often considered a safe haven asset? Gold is an emotional asset. It's driven by fear and greed. When investors are greedy, they buy gold. They think the price will go up forever. When investors are fearful, they sell gold. They're afraid the price will crash. This fear and greed cycle can create wild swings in the gold market. It's important to be aware of these psychological factors. Are investors playing too safe or not safe enough? Is the current behavior of investors in line with prudent risk management, or does it hint at excessive caution? Sentiment plays an immense role in gold's price dynamics, often overshadowing fundamentals. Amidst global events and economic data, the psychological pull towards safe assets like gold intensifies, especially as investors digest a mix of corporate earnings, election predictions, and fluctuating bond yields. As Yi Jing teaches, seek balance, not excess. This principle resonates here, as gold's role in portfolios should balance rather than dominate, ensuring that overexposure to gold doesn't hinder overall growth. Don't get caught up in the hype. Do your own research and make investment decisions based on your own individual circumstances. How can gold allocation benefit portfolios in times of global economic instability? The global economy is in a state of flux. We're facing multiple challenges. Inflation is still a problem in many parts of the world. The war in Ukraine is disrupting supply chains, and central banks are raising interest rates. All of these factors are contributing to uncertainty, and uncertainty is good for gold. When the global economy is uncertain, investors flock to safe haven assets. Gold is a classic safe haven asset. It's a tangible asset that's not subject to the whims of central banks. That's why many investors believe that gold will continue to be a good investment in the years to come. How should investors approach gold from a long-term perspective? Patience is paramount, echoing Sun Tzu's wisdom. The wise warrior avoids the battle but is always prepared. For institutional investors and high net worth individuals, maintaining a steady allocation in gold can serve as both a hedge against inflation and a counterweight to riskier assets. For long-term wealth preservation, a measured investment in gold, whether directly or through derivatives such as gold ETFs, could enhance portfolio resilience. Furthermore, increased allocations can help mitigate volatility tied to other asset classes, aligning with the cyclical safety net that gold has historically provided. As Yijing suggests, the wise one aligns with the current to reach the shore. With this global context in mind, gold's prospects seem favorable, making it a prudent choice in the face of long-term economic cycles. Gold is not just a standalone investment, it's also an important part of a diversified portfolio. Diversification is key to managing risk. By investing in a variety of asset classes, you can reduce your exposure to any one particular asset. Gold can help to diversify your portfolio because it tends to move independently of other asset classes. For example, when stocks are down, gold often goes up. This is because gold is seen as a safe haven asset. When investors are fearful, they sell stocks and buy gold. This negative correlation between gold and stocks can help to reduce the overall volatility of your portfolio. What role can gold play in global portfolios facing diverse currency risks? Given the volatile landscape of currency and economic policies, gold acts as a cross-currency hedge. For international investors, gold not only offers stability but also diversification benefits, reducing risk tied to any single national economy. By allocating a portion of assets to gold, portfolio managers can potentially soften the impact of currency depreciation and inflation in key markets, following Sun Tzu's precept, "The best victories are those that require no battle." In this case, gold provides a quiet, stable counterbalance that preempts rather than reacts to currency volatility. There are both pros and cons to investing in gold. It's important to weigh these factors carefully before making any investment decisions. One of the main arguments in favor of gold is that it's a store of value. Gold has been used as a form of currency for centuries, and it's likely to retain its value in the future. Another argument in favor of gold is that it's a hedge against inflation. When inflation is high, the purchasing power of fiat currencies erodes. Gold, on the other hand, tends to hold its value. Is patience the ultimate strategy in navigating gold's market cycles? The answer, much like gold itself, is enduring. As Yijing said, "The wise man brings calm, and the world around him finds order." Patience in the face of temporary setbacks, as seen in the recent price corrections, often yields stronger returns in the long run. Investors who refrain from panic selling during minor corrections and instead hold a strategic long-term perspective on gold are more likely to see their portfolios benefit from its intrinsic stability. Expert opinions on the future of gold are mixed. Some analysts believe that gold is headed higher. They point to factors such as inflation, geopolitical uncertainty, and the increasing demand for gold from central banks. Other analysts are more cautious. They argue that gold could be due for a correction. They point to factors such as rising interest rates and the strong US dollar. It's important to remember that expert opinions are just that, opinions. They are not guarantees. It's up to each individual investor to do their own research and make their own investment decisions. In all fighting, the direct method may be used for joining battle, but indirect methods will be needed to secure victory. The future of gold is uncertain. While some experts predict a steady rise in its value, others foresee potential fluctuations due to various economic factors. Should gold be treated as a static investment or a dynamic asset? Gold should not be considered a static hold-at-all-costs asset, but rather a dynamic investment, its allocation shifting based on market conditions. As noted, gold often performs best under circumstances of high inflation, low interest rates, or market instability. Therefore, you can adopt a tactical approach, adjusting gold allocations in response to emerging risks, such as potential Fed rate adjustments or rising geopolitical tensions. But one thing is for sure, gold is likely to remain a popular investment for many years to come. Its allure as a tangible asset that can be held and stored securely continues to attract investors. Gold has a long history as a store of value. From ancient civilizations to modern economies, gold has been treasured and sought after, and it's likely to retain its value in the future. Its intrinsic value and universal appeal make it a reliable asset. Gold is also a hedge against inflation. When the cost of living rises, gold often appreciates in value, providing a buffer against economic instability. When inflation is high, the purchasing power of fiat currencies erodes. This erosion can lead to significant financial losses for those holding cash. Gold, on the other hand, tends to hold its value. Its scarcity and demand ensure that it remains a valuable commodity. This makes gold a good investment during periods of high inflation. Investors often turn to gold to protect their wealth. The global economy is facing many challenges. Inflation is high, interest rates are rising. These economic pressures create an environment where gold can thrive, and the war in Ukraine is causing uncertainty. Geopolitical tensions often lead to market volatility, driving investors towards safe haven assets like gold. All of these factors are bullish for gold. The combination of economic instability and geopolitical risks makes gold an attractive option. Gold is a safe haven asset. In times of crisis, it provides security and peace of mind. When investors are fearful, they turn to gold. Its stability and historical performance make it a go-to asset during turbulent times. This is likely to continue in the years to come. As long as uncertainty and economic challenges persist, gold will remain a cornerstone of investment strategies. To put it simply, we have witnessed that it is not only feasible to combine ancient Eastern wisdom with modern financial strategies, but it is also possible. This is a revolutionary invention. From embracing change to finding a balance between empathy and determination, this perspective on business management is refreshing thanks to these principles. Therefore, let's stay optimistic. These timeless and timely strategies can help businesses thrive. The importance of balance and smart strategy cannot be overstated. The key is to find the perfect spot and maintain agility, just like a tightrope walker with a safety net. To navigate the future economy, it is crucial to adopt careful and smart strategies that emphasize balance and adaptability. The current global market situation is not a simple matter. It has both favorable and unfavorable factors, as well as opportunities and risks. The environmental resources of each region on Earth are unique due to their differing latitudes and longitudes. We can summarize real-time opinions using artificial intelligence operations such as neural networks that take into account regional characteristics and national economic data. By watching our videos every week, you can keep yourself informed with a wealth of information that will improve the quality of your life in many ways with minimal time investment. In order to survive in these volatile financial environments, it is crucial to be able to adjust and avoid increased risk. Regardless of how experienced you are in investing, it's crucial to keep an eye on our video debuts to make better decisions. It's crucial to remember that knowledge is not just a tool to enhance your value, it's also a power. If you have any topics you're interested in, feel free to leave a message. To conclude this episode, I want to express my gratitude to all the viewers for their support. If you find that today's video is helpful, please like it so that you can easily find it later when you need to watch it. I want to express my gratitude for your attention. Thank you. Thanks.